How's it going, guys? Cryptobud here for today. First of all, this is a follow-up video on my last live stream on my contentious and controversial idea of Bitcoin Cash. Yes, I am, guys. I am putting down the hammer right now. I am bucking the trend for Bitcoin Cash. This coin has polarized the Bitcoin community. For the last several weeks and months when it first came out, it was the very first fork. I call it the original fork of Bitcoin. And because this coin has so much polarity and has so much hate, I would say, I find it to be an extremely important, undervalued opportunity. And I know what you're probably saying is, I'm not going to even listen. You can go ahead and you can turn off the computer right now and switch over. But very few people are covering Bitcoin Cash. In fact, we have more Bitcoin cheerleaders right now than actually any sort of other one. Now, in this video, I'm going to talk about the facts. I'm not going to talk about any of the politics. I'm not going to talk about any of the biases or anger that I have towards certain individuals. Because after all, good research and analysis is not about looking at your opinions. It's about looking at it from an objective lens. And the very first thing you want to do, and also when you evaluate your coins, is to get your biases out. Bitcoin is by no means perfect. And right now is the perfect time to openly discuss the elephant in the room, which is going to be Bitcoin Cash. Yes, guys, this is what's going to be. All right, guys, so let's get started. I'm very excited to talk about this one because I always love to get into controversy, always trying to pave new ground, and always try to expose different coins that perhaps are overlooked and underestimated. That's what I do. That's my research. That's my strength. I look for the underdogs first. That's how I got into a lot of the coins that have perhaps made you a lot of money and has made me a lot of money in the span of since I started this channel. All right, so let's go ahead and get started. I call this one Bitcoin Cash misunderstood and underestimated. First of all, let's talk about what Bitcoin Cash is. Bitcoin Cash was the first fork that came out. It was the first contentious fork that came out because the miners could not agree on a protocol, which, in all due respect with the miners, I see the reason why. It was spearheaded by several individuals in the community that felt that the original vision of Bitcoin was not being upheld. And because of that, they decided to fork Bitcoin into a very first fork. That led to another fork currently that we have, and potentially more forks. Now, whether you agree with the fork or not, let's talk about what Bitcoin Cash is. First of all, Bitcoin Cash is a pre-mined coin that had a genesis date of 2009, January. That's correct, guys. It is the exact same date as Bitcoin Core. No different, exactly the same. So, it is as scarce and is the same as Bitcoin. The same exact circulation. No more Bitcoin will be created. No more Bitcoin Cash will be created. It is a truly deflationary coin. So again, 2 points right there. Here's where it differs. And this is where the part I need you guys to understand why you want to keep an open mind. Because Genesis date 2009 was the start of this entire Bitcoin run. This has changed many lives, and not only has it changed many lives, it has changed the landscape for cryptocurrencies permanently. Bitcoin Cash has one key feature that will, in my opinion, allow it to supersede some of the other coins, such as, yes, the Big Daddy. It has an emergency difficulty adjustment that is being used currently right now to incentivize the miners to switch over from Bitcoin Core over to Bitcoin Cash. Now, this is where I need you to think, and me, where I think of it as a trader and as an investor, not so much as a Bitcoin maximalist or as a Bitcoin fanatic, a diehard fan, is that the emergency difficulty adjustment is very important because that's the only way that you're going to be able to bring back the hash power that's currently in Bitcoin Core. The miners have only one incentive, and that is to make money off the transaction fees and to obviously secure the network. The problem is that you do need the miners because by nature, Bitcoin was a proof of work coin and still is. And that's the way it was originally designed. That was the success of the Bitcoin. That's the reason why we have what we have right now. The transaction fees have increased because of the congestion in the network, right? So what's happening right now, as you already know, as more people begin to use Bitcoin to transact, it basically clogs up the network. That's the reason why we have our SegWit problem. That's the reason why we have the Bitcoin Cash problem. That's the reason why we started off with this problem to begin with, and we inherited because people couldn't agree on a solution that would best benefit the entire network. The second thing is that Bitcoin Cash has no backlog on the network because they can always increase the block size. So let me explain that one more time. If your block size cannot be expanded at the current rate at which your transaction speed is, you're going to have a backlog, which is exactly what we're having currently. Now you can argue that for Bitcoin Core right now it's a little different because they've kind of fixed that a little bit, but this is going to be a very, very contentious point for future forks, if we do have future forks. It all has to do with the congestion on the network. All right, let's talk about the Bitcoin Cash sentiments real quick. What I usually look for in investments, and as you guys already know, is I look for points of extreme optimism and also extremes of points of depression. The reason why Bitcoin Cash showed up on the radar, and one of the reasons why it's so important to understand, is that this coin was written off for dead. In fact, when it first came out on the last fork, people just nicknamed it Bitcoin Trash. They said it is not the real Bitcoin, rightfully so. It was a copycat off the other one. It was a cash grab from these individuals. It is not profitable for miners to mine, and there's some partly true on that. It has low hash power because everybody doesn't want to mine it. Jihan and Roger are bleep bleep bleep. I'm sure you can put in the whatever you want to put in on that one, and of course the politics behind it, right? Miners versus developers, developers versus miners, community members versus miners, miners versus community members. You got three parties in there that obviously can't agree on anything, I think, at some point. So instead what they got to do is fork everything instead and create their own little chain. Now let's think about it for a second. Forget about the politics. Forget about the fact that we have a disagreement on anything. Let's talk numbers. The reality is this: Bitcoin Cash has a huge market hold right now in the Korean market, specifically Bithumb. If you take a look at the volume, we're transacting almost $1 billion worth of Bitcoin Cash. I can tell you right now there are a handful, actually there are an unlimited amount of coins that can't even reach this volume, let alone get to this point. Its current price, as I was doing this video a while back, it was 681. It's dropped obviously quite a bit since the last run up, and its volume primarily is in the Korean market. So 49.86% on the volume side. For some reason the Koreans love Bitcoin Cash. Don't tell me why, but they do. Bitfinex is coming in second, and that's based in Hong Kong, and that runs at 8.96% with a volume of 165. Now again, these numbers are nothing to compare to Bitcoin. They're low, obviously, but compared to a lot of the other altcoins, specifically some of the sub 5 up coins, this is actually a pretty good distribution of volume. So forget about any of these politics. Looking at the numbers alone, it tells you that there is support for this coin, whether you like it or not. Corebit is another one, Korean. Coin1, Korean. HitBC, Asian. Bittrex is actually pretty low. So if you take a look at the distribution of the coins, it's obviously very Asian centered. Now, there is a reason for it, and you guys can probably give me your thoughts about why is it that the Asians love Bitcoin Cash, considering. But if there was a consensus in this one, I would say that the people who trash Bitcoin Cash, it's really people probably own Bitcoin, and they're probably in the Western countries. At least I would assume that would be the case. Regardless of what it is, the Asian markets dominate this coin by far. While in the Americas, they represent a very smaller percentage of it. So that tells me that there is a market for this coin. Okay, so regardless of the sentiment. So let's move on to our next one. Some of the key features for Bitcoin Cash is this. Number one, they have a larger block size. So after the fork, what ended up happening is they went ahead and increased the block size. They also have what I call a no permanent block size cap, which means they can always rotate that whenever they need to. And they're really good about, you know, trying to monitor that cap. Now, right now, obviously the traffic is all in Bitcoin, so that's something that they're going to have to consider later on. There will be no backlogs because of that. So any sort of increase in scalability and transactions are not going to be an issue for Bitcoin Cash. The problem here is obviously getting the people over from Bitcoin Core. And the other one is going to be important is going to be the transactions. They're going to be faster. Some new ones that they have coming up, and I'll talk about that in a bit, is that they're planning on doing Bitcoin ATMs. Yes, that's correct, you guys. You heard it here right. Where you're going to be able to transact Bitcoin in ATMs. Now, they already have those right now in a lot of places. But what they're trying to do is mass unload these ATMs so that it would be much more accessible to use Bitcoin. They also, and actually Bitcoin Cash currently, along with the Bitcoin Core code, can run smart contracts. Now, I'm gonna venture out. I'm gonna throw a hypothetical out right now. Bitcoin, is it considered to be a store of value, or is it considered to be a currency? Currently, right now, in its current state, Bitcoin Core is considered to be a store of value. In fact, nobody uses Bitcoin for anything. They probably use it for just buying altcoins and maybe transferring coins from here and there, but everybody likes to hodl Bitcoin. So what's turning it into, it's turning it into a store of value, not as a transaction. Now, originally, the intent of Bitcoin was for transactions, but because people have found out that there's more money to be made on the appreciation side, they rather not do that. And that's actually a problem, right? Because you're basically creating a cryptocurrency that does not do what it was intended to do. The second problem here is that the second advantage of this feature of smart contracts is that they don't use gas, which you have in Ethereum. As Ethereum scales, you do have an increased incentive, or basically as the code gets more complex, you're going to have to increase the price of gas to execute those smart contracts. Here, there is no gas, so it's pretty much run the contracts as we go. The problem right now with Bitcoin is that, in Bitcoin Cash, is that there's a low level programming language, so it's not as accessible as Ethereum and not accessible as some of the other platforms that have like higher programming language code that you can basically start right off the box. Once they fix that problem and then they have that, then you're going to see Bitcoin applications ride on that. We see that a lot with Quantum. Qtum has used both the Ethereum virtual machines, and they've also used the Bitcoin Core protocol on the blockchain to run their applications, which is a lot faster and a lot more secure than Ethereum's. So there is a lot of advantages with using the Bitcoin Core blockchain versus the Ethereum. Now, right now, the problem also we have with Bitcoin Core is that you have limited transactions with that backlog I was talking about earlier. And then SegWit 2x and 1x, the problem, the clincher here is that SegWit 2x and 1x won't cut this type of advancement in the protocol. So if you're looking at Bitcoin as a currency, Bitcoin Core does not work. I mean, SegWit 2 is just a band-aid to the problem. Same thing with SegWit 1x, which is a current core, and that's the reason why we're having all these forks to begin with. If you think of it as a store of value, then yes, you can technically get away with it, but Bitcoin will no longer be what it was intended to be, which was supposed to be a transactional currency. Now, you can make a case for Litecoin, and yes, Litecoin definitely has the abilities that perhaps Bitcoin doesn't have, but it is not Bitcoin. The brand is not there. And so we'll talk about that in another video, but let's move on to our next one. Let's talk about the market facts. This past year has been an astronomical year for Bitcoin. In fact, we've risen so much, and because of that, everybody thought that in August, Bitcoin Cash was going to be trash. But let's take a look at the coin market cap. Bitcoin Cash right now ranks number 3. Now, we've had a nice run up since the 300 level. In fact, it's almost doubled, while Bitcoin has done something a little bit less than that. But the fact of the matter is that it is right behind Ethereum. In fact, I would say that Bitcoin Cash is not only catching up very, very quickly to Ethereum, but in fact, it may even reach Ethereum's price point at some point. But rank 3 out of 1,000 coins, I'm not sure if you can consider that trash or not. But let's move on to our next one. Evidence number 2. This point is I'm actually really interested in, because what's happening right here with Bitcoin pricing is that we're seeing what I call a divergence in the valuation price, where the market does not recognize the true value of a currency and creates a special window of an opportunity to purchase one of these lower cash points, coins at a lower price. So either you believe two things. One, Bitcoin Cash is overvalued, which means it shouldn't be at 600. Or two, you believe that Bitcoin Core is also overvalued. Or you can believe that Bitcoin Cash is undervalued and Bitcoin Core is overvalued. Now, the problem here is that if you take a look at Bitcoin's price, it's at 7,187 current prices as of today. The Bitcoin Cash price is only 8.5% of that. Now, if I'm going to value Bitcoin Cash as the equivalent of Bitcoin Core without the features, with the features, and the only thing that's missing here is going to be the transactions, which eventually can be done. The question I can ask you is that is 8.5% of the total Bitcoin price, is that an undervalued asset versus what Bitcoin is, given the transaction volume? So given the transaction volumes you have right now with Bitcoin Cash, I would say that this could be a fair value for Bitcoin Cash, or maybe in some cases it could be overvalued. But if you're looking at the future of Bitcoin Cash, this could be a whole different story. Now, again, this projection's out 5 years out. You have to assume a lot of things in regards to transactions. So let's move on to the next part. This is actually the most important part. In regards to mining difficulty and profitability, what we're looking for here is a profitability index. Bitcoin has a profitability on the mining part. It's currently, if you're reading this off as 1.03, what you read here is if the one in green, that number 1.03, is that higher than the black one, which is the BCH, that means the miners will switch over to Bitcoin Core, the Bitcoin Core chain. Now, if you track back at the averages for the last 7 days, 6 hours, and 1 day, they're not really that far apart. In fact, I would venture to say that there really isn't much of a difference on the mining difficulty for Bitcoin versus Bitcoin Cash. Now, obviously, if that number rises and that there's a larger disparity in it, then you would see that the market would adjust the price. But what I'm seeing right now is that in terms of difficulty, it is actually not that much profitable to mine Bitcoin versus Bitcoin Cash. Now, what's going to happen is Bitcoin Cash can adjust this. And so let's go ahead and see what Bitcoin Cash does to fix itself. Currently, what you have is another one where Bitcoin Cash has moved forward to actually enable Bitcoin Cash on all ATMs in LA. Now, remember that if you have Bitcoin Core running with SegWit 2x and you are trying to run ATM machines and transaction fees, there could be a problem with this. Bitcoin Cash actually solves this problem because, again, it can expand that memory pool. And another one is that it actually has a very limited deflationary supply. And so if you take a look at it, when somebody goes onto the machine and they can use this low fee can actually be very advantageous. So I'm expecting ATM machines to now have Bitcoin Cash, which should increase the transaction volume, which should increase the profitability for some of these miners. So very interesting idea here. The other one is that Bitcoin Cash has also successfully tested for atomic swaps. And this was actually recently, but didn't really catch a lot of news. But what's happening right now is that they're joining in the bandwagon with Decred, Litecoin, all the other guys. And let me give you an example for this. Atomic swaps are huge because what happens is that you don't have to use centralized networks anymore to exchange currencies. If you have Bitcoin Cash and you're using atomic swaps, you're going to be able to transact very quickly and exchange currencies extremely fast on a network. And again, why wouldn't Bitcoin Core be a good suitable one for this? Well, although Bitcoin Core is part of the atomic swap family as well, the problem is going to be the mempools, right? So between Bitcoin Cash and Bitcoin Cash is definitely moving in the right direction on being a transactional currency versus a store of value currency. Now, the other one I can find interesting is this one. OKX is going to unfreeze and is going to resume trading, and there has been rumors already about this one that they're going to allow Bitcoin Cash futures trading in the Chinese exchanges. Right now, we have a report from the CME group that Bitcoin Core futures will be trading in. Now, once they unlock the Bitcoin Cash in China and they begin to allow this, what's going to happen, and they're going to do a consumer-to-consumer trading platform. Again, transaction volumes are going to be off the charts, which means that if the current Bitcoin Core 2x can't handle that, the transaction fees are going to be extremely high. People are going to migrate over to Bitcoin Cash. So here is another evidence pointing towards the increased use of Bitcoin as a transactional currency versus a store of value asset. Now, the other part I want to talk about is going to be the network upgrade that's happening on November 13th. The Cash network is going to change their actual code to reflect a hard fork, but there's not going to be additional new code coins being created. What's going to happen is that they're going to adjust the algorithm so that you're not going to have a cyclical difficulty adjustment. So let me talk about that 13 and why that's really important. If you remember from this chart I was talking about earlier on difficulty rate, the problem you have right now with the adjustment difficulty rate is that it oscillates, meaning that at every so amount of time, every 2 days, after 2 days, or after, actually there's actually a certain number that goes off, the difficulty rate oscillates. And so if you take a look at this graph real quick, for Bitcoin Cash, you could see it's that blue line right here. Every so often when it oscillates, what you end up having is a massive change in difficulty rate. And because of that, it creates a spike and the miners begin to ditch Bitcoin to move over to Bitcoin Cash. The problem with that is that once you do that, obviously it slows down. You don't have anybody to secure the network. You don't have anybody to process the transactions, etc., etc. So what's happening is that these oscillations that you saw back in September, where the difficulty rate spiked up and then it dropped, spiked up and dropped and spiked up, created a problem. Now Bitcoin doesn't have this because their difficulty rate actually is more of a linear flow. So if you take a look at difficulty rate, it's more like a standard, like stepwise fashion. So it's more predictable. But obviously the difficulty rate is getting higher over time. For Bitcoin Cash, they can always adjust it, but instead it's flatlining and you have these little peaks that come out. And that's what's creating a lot of the problem. So what they're going to do with that fork is that with the adjustment, is that they're going to try to mimic something where it removes these little peaks, and instead you get a nice flatlining. That's going to be huge, because once you do that and you can be able to adjust the difficulty rate whenever you want, which by the way Bitcoin can't really do that well. In fact, I think they have a more of a longer time to do that. You're going to get more miners to hop over to Bitcoin Cash, and that's the whole point. The whole point is to get the miners over so that you can begin to bring the hash power in, which eventually you can process those transactions, etc., etc. You can mine more of those coins. So the point I'm trying to make here, guys, is this: as they go through the improvement on the network, they are moving in the direction of making sure that the difficulty adjustments do not interfere with the miners leaving. So they're going to incentivize the miners to even more to come over to the network, which eventually will draw them away from Bitcoin Core. While Bitcoin Core is dealing with the whole segue problem, these guys are already running full steam ahead, knowing where to enter. The problem with Bitcoin Cash is that this is a reflection of people's reasoning for investing in crypto. And what I say by that is that the original investment for crypto was for a transactional utility, not for a store of value, unfortunately. What has become down to now is a way to store value, which I'm not saying is a bad thing, because we definitely want something against the fiat currency, but it has to be something where it's also liquid and has to move throughout the system quickly enough. Otherwise, it becomes stagnant. Money that is stagnant becomes more of a speculative purpose, and that wasn't originally the intent of Bitcoin Core. it's turned that way because indirectly, as demand for the network has increased, it has backlogged the entire network, forcing Bitcoin Core to grind to a halt and not be able to be adopted mainstream. And that's one of the issues right now that we have in the crypto community, is that the more people use it, the more congested the network gets. And that's not a bad thing, but it's one of the indirect consequences of not being able to adjust according to the times it has. So I think Bitcoin Cash has the right idea. Now again, people are not gonna understand this because we are all so bent on one coin and being the one and only, and that could be potentially true and that could be completely wrong. But what if I am right? What if there is a possibility that Bitcoin Cash is and the market is undervaluing this? At what price do you think Bitcoin Cash would be? And so I want you to leave off with that comment today. If I'm completely wrong and I'm talking out of my entire behind and I have no factual proof, aside from the fact that I looked at the transaction costs, I looked at I looked at the difficulty rate adjustments, and I looked at the value that Bitcoin Core is providing with the price that it's at right now. If you think that that is merited, then definitely this whole entire presentation goes out the window. But what if there is a possibility that Bitcoin Cash may perhaps take advantage of the SegWit situation and be the actual real winner in this entire forking situation? By the way, it hasn't forked. There's no reason for Bitcoin Cash to fork. The other two are going to be forking left and right because there is no permanent solution to the actual transaction problem aside from SegWit. So let's take a look at all the angles. I own Bitcoin, I own Bitcoin Cash, and I'm probably going to own SegWit 2x. The big question I want to ask is, am I going to keep all three? Probably not. Which one are you going to pick and which one are you going to own? And look at the facts, and don't look at just your emotions, and don't look at just because everybody said so. The future is going to be, in my opinion, not so much about a deflationary currency, because that's what gold is, and I think that's a very important part of gold, because you're turning a digital asset into a store of value instead of what it was intended to be, which was to be a transacted across borders, used as remittances, create opportunities for people, versus hoarding it in a wallet and not using it until it doubles or triples in price and then selling it to the next guy or girl. All right, guys. Cryptobud out. Have a great day. Peace out.